Hello guys, welcome to another backtesting video. Today I'll be backtesting the data of Monday, that is 15th of April 2024. I found an interesting trade. It was a very clean setup. As you can see, the weekly bias was bearish, the daily bias going on Monday was bearish, and yeah, whenever we are bearish we look for sells. So whenever we look for sells, we look for supply zones, and our idea being our setup, our entry model, right? So it has become the mundane, it is become repetitive, so I have become a master in the strategy. I am not being arrogant here, but I believe in myself and I know what I'm capable of. So on Monday there was core retail sales and retail sales USD, so there was no London session news, and even if I go to my FX book, there was no news. So that is when I go to the lower time frames. You got it right. So my bias on DXY here, you can clearly see, is bullish. The weekly was bullish. The weekly was bullish on DXY, and GU was bearish. Whereas the Monday, yeah, there is a chance that the market can come back and rebalance the price, but I have informed you guys a gazillion of times that I don't trade pullbacks. I trade with the trend, right? I will not trade this pullback. Doesn't matter. I will only trade with the trend. I am a pro trend trader, so I was looking for buys on DXY on Monday and sells on GU. So that was the idea going towards Monday. So that is when I go to the lower time frames, starting from the 4 hourly, to look for potential rejection points. So this was the supply zone that I marked, and this supply zone was valid due to this break of structure, and the closest zone that I could mark is this fair value gap on the H4. So if I can find a H1 supply zone or a M30 whatever in this H4 fair value gap, it would be so valid. But yeah, the market can easily Monday and Tuesday go up and come to this supply and also make a move. As we know, the bearish weekly profiling, first Monday, Tuesday tend to go up and then continue to the downside, right? So that was also a possibility on the markets. So that is when I went to the H1, and exactly what I said, this was aligning with the H4 fair value gap, this supply zone. So I was looking for a trade from here. Why I was looking for a trade from here? Because the Asian range closed something like that, and according to the Asian range I decided my zones, and yeah, this was the supply zone I was looking to trade a quick. And also the momentum on Friday was very bearish, so that gave me more confidence that we might go down from there directly. So that is when I go to DXY, and on DXY I was looking for a trade from this sort of demand. On Monday it was also aligning with GU, so that is when I went to GU. So obviously our typical Asian range entry model, I wait for Asian high sweep. Obviously liquidity is the essence of the market, so we need liquidity to get sweep before our move happens, right? With the bias, and everything we do, SMT, liquidity sweep, everything with the bias, always with the bias. So that is when on the hourly I took an L on Monday. I've also journaled this L, so no problem. I've learned from this L, and I could avoid this L. I've journaled it, so I have found out my mistake. My mistake was I was watching the markets at very lower time frame, like the M15. If you were watching the markets in the M15, you can argue that you would have taken a trade here, break even. It would have been a break even trade right here, which was 12 p.m. Indian Standard Time, which was London Open, kinda 30 minutes before London Open. Inducement, given inducement, this here I would have entered, bro. This is where I would have entered. If I was watching the market on the M15, I would enter here, right? But if I go to the hourly candle literally saves us. The hourly candle literally shows us that no, the market is not swept enough liquidity. And also this was an H1 fair value gap trade. There was a fair value gap on the H1. So fair value gap trades are not that high probability, right? Because we don't know where the move might happen from. And yeah, that was my idea behind the trade. I could have avoided this loss if I was watching the markets on the hourly and taken a win. Afterwards we got a win. Obviously we got a win, but it was before that I already took an L. But to be honest, if I was so confident, I would have taken the second trade as it is my rules. And yeah, so this was 3:15 on Monday. And So this trade was an M30 from an M30 supply zone. As you can see, this supply zone was valid due to this break of structure right here, and the market came all the way up here. Rejection. This is the exact kind of rejection I want to see every single time, right? This was the M30 supply zone, right? Sorry, M30 rejection candlestick right here that we want to see every single time. We saw this candle on 4:30 p.m. Indian Standard Time, which was 2 hours before news. So it was also valid because it was before news, and it was an M30 supply zone. So obviously an M30 rejection would be more valid. It would make more sense. And as I've also written here on this call out, where is it? Whenever there is an M30 supply zone, there's high probability of getting a rejection candle at the M30, like we saw in this trade, and vice versa for H1 and M15. So yeah, this was the M30. This was the M30 rejection, exactly what we wanted to see, and we caught our 1:3. So this was a losing trade, but if I was patient enough, and also I have learned one more thing in this trade was the market can make its move from any supply zone. Just because the market is bearish doesn't mean that it should make the move directly from here, right? So you can see the market gave inducement 3 times this day. One inducement here, second inducement here, which we got induced, and at the third time we got the move. So the higher the time frames you watch the markets, the better. That is why I have changed my view of the market from 15, 30 to 1 and 4 hourly. Now I watch the markets at the hourly and the 4 hourly to reduce inducement and only take the A-class setups. So this was the 1:3 that I caught, and yeah, this was a losing trade, and afterwards I got a winning trade. So the strategy is literally playing out, or at least it was playing out, and even now on the live markets, as you can see, the strategy is playing out. And yeah, as you can see right here, today also I'm looking for a trade. Let's see how we go. Right now I'm break-even trader, so now I need to go on that next step to be profitable.